Well, Canfin is definitely one stock that we're going to watch out for today in trading action, but there are several others, so let's straight away take it to the team. All our colleagues are standing by with the top stock list of the day. And Tata Motors, of course, is the first off the block. The company reported what looked like a very good set of numbers, driven by a strong beat in the JLR business. But there's also the DVR issue that we have to talk about. Let's go across to Sonia for the details. Sonia?
Well, thanks a lot for that. It was a very strong showing from the Jaguar Land Rover business, which aided the overall numbers as well. A big beat on the numbers, both on the top line as well as the bottom line for Jaguar Land Rover. Consolidated business revenues went up over 42%. The margins have improved 700 basis points, coming in at 14.4%. And it's a turnaround quarter for Tata Motors. On a year-on-year basis, the company posted a net profit of 3,200 crores compared to a loss of 5,000 crores same time last year. A large portion of this was due to Jaguar Land Rover, where the revenues went up 57%. The EBITDA went up 960 basis points year-on-year, coming in at 16.3%. And the EBIT margins have improved to 8.6% versus 6.3% last quarter. Not just that, the net debt for JLR has also come down to £2.5 billion as on the 30th of June. Now, the company says they expect the demand to sequentially improve in FY24 for the CV business, and the net automotive debt has reduced to 41,700 crores. But the important bit for Tata Motors really is that now if you are a DVR shareholder, then for 10 DVR shares that you hold, you will get 7 Tata Motors shares. So there will no more be Tata Motors DVR. It will all be, converted into Tata Motors shares, which is a big positive for Tata Motors shareholders.
Thanks for that, Sonia. And we'll be joined by Mr. Jay Kumar of Prime Securities and Sriram Velayudan of IIFL Securities to talk more about how to approach both these two stocks, particularly Tata Motors DVR. Well, the other big boy, L&T, came out with its set of numbers. They announced a buyback as well. Vivek joins us to analyze those numbers. Morning, Vivek.
Well, good morning. Clear beat across all parameters as far as L&T is concerned. Beat on revenues, core EBITDA, as well as profitability. The slight blip being, the margins, the core infra margins. The buyback, of course, came in as a positive surprise, significant premium to the current market price. Now, talking about the order inflow as far as the L&T was concerned, coming in extremely strong, 65,520 crore, much above what the street was anticipating, up 57% on a year-on-year basis. Now, talking about the slight negative, the core margins that we are looking at, Morgan Stanley says that the infra margins came in at 3.8%, mainly reflective of the fact that the weak job mix that the company is right now executing, earlier legacy orders which were, booked at much lower margins, which is what is impacting the margin. In the conference call, the management has alluded to the fact that they expect margins to be subdued for the next 2 quarters, expect a recovery in the 4th quarter. Talking about the numbers themselves, revenues higher by 34%, core EBITDA up 23%, profitability up 46%, all clear beats. The buyback, 10,000 crore size, the buyback price at 3,000 rupees a share. So 2.4% of the total equity is what the company is looking to buy back. The order book has crossed 4 lakh crore.
All right, Vivek, thanks very much for that. Well, we have the L&T top management, R. Shankar Raman, whole-time director and Chief Financial Officer of the company, at 10:15 for a chat today. Okay, well, more numbers. SBI Life reported numbers, and they're good. Surabhi is here with details. Surabhi, morning.
Morning, Prashant. So, SBI Life, it was a miss on the VNB margin front. The APE number was largely known because of the monthly numbers update. So, the APE was up 4% on a year-on-year basis. The value of new business, that was down 1%. The margins came in at 28.8% versus 30.4% same time last year. Now, the VNB margin miss was largely due to a change in product mix. So, the non-par segment now contributed 40% to the APE versus 47% earlier. Also, there are higher payouts on the back of commissions due to the change in expense of management ratio. So, that could impact VNB margins going forward. So, going with a red on SBI Life.
Okay, so not that great for this quarter. Thanks, Surabhi. We'll keep that in mind. Let's talk about Cyient. Rima, morning. A slight decline in the revenue.
Yes, Cyient's a mixed quarter. Revenues miss, margins beat. The top line for the company has fallen by 3.6% on a quarter-on-quarter basis. So that's a miss, but the margin performance is quite healthy, improving by 50 basis points. The FY24 top line guidance has been retained at a 15 to 20% growth. But on the margins, the company has narrowed it. The earlier margin guidance was an expansion of 100 to 200 basis points. Now they're calling for a 150 to 200 basis points margin expansion. So the lower end of the margin guidance has been raised. But the stock has been a rank outperformer. It's done so well so far this year. So in the absence of any big positive surprise, I'm going to go with red for Cyient.
All right. Thanks for that, Reema. And we won't have to wait too long because the Cyient management will be joining in a short while from now. But Reema, coming back to you, CEAT as well came out with its set of numbers. How were they?
Very strong on the operational front. Now, this is the fourth consecutive quarter of a margin expansion. If you pull up the trend, you would see last year margins for the company were at 5.9% and they've been steadily expanding to 13.1%. Very sharp margin expansion. The raw material basket, the cost for the company had come down even on a quarter-on-quarter basis by 1.5%, fueling the margin improvement. The top line growth has come in at 4.1%, largely in line with the Motilal Oswal estimate, and the profits have come in at 144 crore rupees. Back to you.
All right. Thanks very much for that. By the way, the management will be joining us. The CEAT management will be joining us later today as well. That's at 10 this morning. Okay, well, let's focus on Amber and Dixon. Both reported numbers. Surabhi has got more details. Surabhi, back to you.
So for Dixon, the revenues were in line with the street expectations, but it was a miss on the EBITDA margin front. Now, revenue was up nearly 15% on a year-on-year basis. The EBITDA was up 32% on a year-on-year basis. Margins have come in at 4% versus 3.5% same time last year. The expectations were of 4.5%. PAT is up 47%. Now, sequentially, margins have dropped across segments. The only silver lining in the results is the mobile and the EMS segment, where the revenues are up 38% on a year-on-year basis and 27% sequentially. But even there, the margins have dropped sequentially. The stock has run up in the last 6 months over 50%, so going with a red on Dixon. For Amber, it was a mixed set. The revenues declined, but margins were a beat. The revenue was down 7% on a year-on-year basis, but the gross profit margin, that was up 310 basis points. The EBITDA was up 33%. Margins were up 240 basis points, came in at 7.8% versus 5.4%. Now, this margin is the highest that they have seen in the last 5 quarters, and PAT is up 9%. A strong operational performance by Amber Enterprises.
Okay, so mixed trends from some of these EMS folks. Got that. Of course, we'll be chatting with Mr. Atul Lal of Dixon Technologies. That's happening at around 9:50 a.m. So don't forget to tune in for that as well. Okay, SRF has been in focus ever since they came out with what looked like a really weak set of numbers and a pretty bleak outlook as well. We have some more inputs coming in from the company, and Sonal has the details here. Sonal, morning.
Good morning, Surabhi. Well, in the conference call, they did indicate that there is weakness globally, and especially for the specialty chemicals business, they did not give any guidance this time around. They said they'll revisit it in the second quarter, and usually the company does indicate what the growth guidance would be like. So it looks like the demand is bleak as well. They highlighted global agrochem inventory destocking coinciding with elevated supplies from China at lower costs as well. For the refrigerant gas business, they said second half of FY24 will be better for the HFC demand, particularly from the US, and the prices in US and the EU could remain elevated compared to past averages. In the packaging business, they said margins are at a significant discount to cycle average, and this is something that they expect to continue as well. On the back of all these comments coming in from the company, Jeffrey says they have cut chemicals revenue growth by 9-14% for the next 2 financial years. They've cut the EBITDA estimates by 19 and 17%. They've cut the target price to 2,000 as well, and they maintain a hold rating here.
Okay, got that, Sonal. Thanks very much. So we'll keep an eye out on SRF as well. Quick recap of our top stocks to watch list today, the ones that have positive news flow around them are Tata Motors DVR, L&T, CEAT and Amber Enterprises. Stocks with negative news flow are SBI Life, Cyient, Dixon Tech, Canfin Homes as well as SRF. And time now for a roundup of all the action in the commodities markets. We have Manisha joining in for exactly that. Good morning, Manisha. What do you have your eye on?
Thank you for that, Surabhi. Well, I'm looking at the metal prices, which have seen some strength on a softer US dollar. Also, China pledging yet again on more economic support for the property sector has been supportive. We already have seen shortages in production, and that has led the steel prices to a 1-month high. Copper is trading at a 2-week high. Nickel prices are back above $21,000 a ton as well. Some pressure, though, is seen in the energy markets there. The crude oil prices, while still holding $83 a barrel and a 3-month highs, but we have seen prices come off its New York highs, and that is because of the surprise U.S. inventory build-up there. All of these markets, though, will watch out for what the U.S. Fed has to do and has to say in sense of future guidance today. And remember, you have the European Central Bank policy meeting also coming in on Thursday. So the next 2 days are expected to be quite volatile. Amid all of that, we seem to be trading on a higher side of range for many of these commodities.
Okay, well, Manisha, thanks very much for that. More later. We'll take a quick break here. Devin Chokshi of KR Chokshi Securities will join in for some stock talk. Lots of earnings to react to. And a little later after that, we have the management of Cyient joining in to discuss their first quarter numbers. Stay with us.